Today is May 12th, and every single one of these events can shift the direction of this bull market. I am breaking all of it down right now. Since our last video, Micron surged 33%, Datadog 42%, Rocket Lab 46%. Then Monday hit. Iran collapsed, oil spiked, a cruise ship HANTAVIRUS outbreak sent biotech into a frenzy. And now, CPI. Let me go through every single story. Sunday night, Trump posted Iran's counterproposal was, his exact words, totally unacceptable. Monday morning, he told reporters the ceasefire is on life support and unbelievably weak. Oil jumped 4% instantly, and gas is now $4.50 nationally, the highest since 2023. The U.S. wants physical possession of Iran's uranium. Iran calls that a red line they will not cross. Neither side has moved on their core demand, and that stalemate is what is keeping oil above $95 and inflation running hot, going into today's CPI print. The oil inflation rates chain we thought was breaking 2 weeks ago is tightening again. Oil is back at 99. CPI is expected to jump from 3.3 to 3.8 this morning. The conditions for a Fed rate cut are moving further away, not closer. CPI at 8:30 this morning. Headline expected at 3.8% year over year. But the number investors are really watching is core CPI, which strips out food and energy. If core breaks above 0.3% month on month, it signals that high oil prices are now bleeding into every other price in the economy. And that is the scenario the Fed fears most. Soft core CPI, rate cut, hopes for 2027, revive and growth stocks rally today. Hot core CPI, yields spike and tech sells off immediately. This single number at 8:30 this morning moves markets more than any earnings report this week. Do not ignore it. Now the story nobody saw coming. A Dutch expedition cruise ship called the MV Hondius was sailing the North Atlantic when passengers began testing positive for hantavirus, a fatal viral respiratory disease spread by rodents. 3 people have died, a U.S. citizen tested positive Monday, and nations are scrambling to repatriate passengers. And the moment the news broke, biotech stocks immediately went haywire. Moderna spiked 9% the moment the headlines hit, then faded to close up just 2.7%. The Evercore analyst covering Moderna was direct. There is no near-term revenue from this, and the stock moves on sentiment, not fundamentals. It emerged that Moderna has been developing a hantavirus vaccine since 2023. The market priced that as a surprise, but it was not new information. Classic outbreak trade, fast spike, fast fade. I want to be clear about the actual health risk because the media coverage has been alarming. The WHO says the public health risk is low. Hantavirus spreads through rodents, not person to person. This is fundamentally different from COVID. The cruise ship outbreak is serious for those on board, but it is not a pandemic risk. And the Moderna move was a fear trade, not a science trade. While everyone was watching AMD last week, 4 other stocks quietly had extraordinary moves that barely made headlines. Datadog plus 42, Micron plus 33, Rocket Lab plus 46, Monday.com plus 26. Each one is telling you something important about where the market is going. Let me explain each one. Micron makes the high bandwidth memory chips that go inside every NVIDIA AI accelerator. Only 3 companies on Earth manufacture this type of chip: Micron, SK Hynix, and Samsung. AI data center growth is creating a memory shortage. Micron raised its HBM revenue guidance significantly, and when supply is constrained and demand is exploding, 33% in a week starts to make complete sense. Rocket Lab gained 46% in a single week, partly on earnings and new contracts, but a large driver is the SpaceX IPO halo effect. When SpaceX prepares to list at $1.75 trillion, every company in the space economy gets repriced upward by investors buying the entire sector. Rocket Lab is the most liquid pure-play space stock available to retail investors right now, and it is being treated as the SpaceX proxy. The Wall Street Journal confirmed Apple and Intel have reached a preliminary deal for Intel to manufacture some of the chips that power Apple devices. Apple has used TSMC exclusively for years. This is a meaningful diversification. Intel desperately needs major foundry customers to justify its massive U.S. manufacturing investment, and Apple wants to reduce its dependence on TSMC amid U.S.-China tensions. Intel jumped 5.7%. This is the foundry strategy gaining real traction. Monday.com is not a name most retail investors know, but a 26% single-session move demands attention. Revenue came in at $351 million versus the $339 million expected. The CEO said their AI platform launch is now the primary driver of every new enterprise deal they close, and that is another direct confirmation that enterprise AI software is generating real revenue well beyond just the giant tech companies. On Monday, Ed Yardeni, one of Wall Street's most respected long-term strategists, raised his year-end S&P 500 target from 7,700 to 8,250. That is 11.5% above Friday's close. He told CNBC that he has been bullish, but not bullish enough, and that the earnings estimates from analysts have been phenomenal. When a veteran strategist raises a target by that magnitude mid-year, it signals genuine, fundamental confidence, not just momentum chasing. JP Morgan Private Bank released its 2026 mid-year outlook with a headline that will surprise people who have been reading bearish AI commentary. The AI supercycle may just be getting started. They said the prevailing narrative has become too pessimistic, and they laid out 3 specific investment recommendations: semiconductor supply chain, energy infrastructure to power AI data centers, and networking and optical equipment. This is JP Morgan advising its wealthiest clients. When they say the supercycle is just getting started, that is a significant institutional view. Disney is in a serious regulatory fight that most investors have not focused on. The FCC is reviewing all 8 of Disney's broadcast licenses, originally not due until 2028, and has fast-tracked that review after controversial content on The View and Jimmy Kimmel Live. This breaks a 40-year streak of regulatory stability for broadcast television, and it is an unprecedented situation where programming content is directly affecting a company's federal broadcast eligibility. Disney beat earnings last week and jumped 8%. Streaming is profitable for the second consecutive quarter. Parks are strong. But now, a regulatory cloud is forming that adds genuine uncertainty for investors who are long the stock. Strong business on one side, broadcast license risk on the other. Worth watching closely before adding to a Disney position. The losers this week. Trade Desk fell 9%, missed earnings, and issued weak second quarter guidance. Dollar General slipped 5.8% on soft guidance and a leadership transition announcement. Palantir pulled back 2.5% despite its monster earnings. Pure valuation concern and profit-taking after the stock ran hard. Even the best earnings do not protect a stock when investors think the price has gotten too far ahead of fundamentals. Here's the thing that nobody in financial media is connecting this week. And when you see it, it changes how you should read every earnings report, every CapEx announcement, and every AI investment thesis we have discussed in this entire series. Palantir's CEO, unable to keep up with U.S. demand. AMD's CEO, demand surge from agentic AI. Alphabet's CEO, revenue would have been higher if they could meet demand. 3 completely different companies, 3 different parts of the AI ecosystem, all saying exactly the same thing in the same earnings season. The limit on AI revenue right now is not lack of customers. It is lack of capacity to serve them. That is a supply-constrained boom, and it is fundamentally more durable than a demand problem. Here is why supply constraint matters so much for your investment decisions. When demand already exceeds what companies can supply, every dollar of new capacity generates revenue immediately upon completion. The massive capex that Google, Meta, and Microsoft are spending is not a gamble on future customers. It is a race to serve customers who are already waiting right now. That completely changes how you should evaluate the risk of AI infrastructure spending. Wednesday and Thursday, Trump meets Xi in what could be the most consequential U.S.-China meeting in years for technology investors. The agenda includes AI guardrails between the world's two largest economies and rare earth export agreements. China controls over 60% of the world's rare earth supply, which goes into every semiconductor and electric vehicle. Semiconductor stocks are highly sensitive to whatever signals come out of this summit. Trump approved NVIDIA H200 chip exports to China, approved customers only, with a 25% U.S. government fee attached to each sale. ByteDance, Alibaba, and Tencent have been cleared to buy. The H200 is 6 times more powerful than the H20 chip China previously had access to. This is a significant upgrade in what Chinese AI companies can now legally purchase from NVIDIA. Chinese companies have already ordered 2 million H200 chips for 2026, but NVIDIA only has 700,000 in inventory. Demand nearly triples available supply before a single chip ships. The revenue opportunity is enormous, but Beijing could restrict domestic firms from buying at any point, and that political risk is real. Both sides of this trade matter significantly before NVIDIA reports on May 20th. Friday is Jerome Powell's final day as Federal Reserve Chair, ending an 8-year tenure that navigated a pandemic, the fastest inflation in 40 years, a regional banking crisis, and relentless political pressure to cut rates early. He is not leaving entirely. He remains on the board of governors due to an ongoing legal dispute with the Trump administration. Kevin Warsh's Senate confirmation is expected this week before the May 15th transition. Kevin Warsh is widely seen as more open to rate cuts than Powell, which is why markets initially reacted positively to his nomination. But Goldman Sachs and Bank of America have both published notes saying no rate cuts until 2027, regardless of who chairs the Fed, as long as inflation stays elevated. The chair matters for tone and communication, but the data is what ultimately forces the Fed's hand. The Financial Times reported that NHS England allowed Palantir staff to access patient data before it was fully anonymized, and that NHS staff internally flagged the risk of loss of public confidence. For a company whose entire value proposition is built on data trust, especially in government and healthcare, this is a reputational risk that sits uncomfortably alongside the valuation concerns already pressuring the stock. Datadog jumped 42%. And the business model explains exactly why. Every AI application running in the cloud needs to be monitored for performance, errors, and cost. That is what Datadog does. As AI adoption accelerates, the number of applications being monitored grows automatically, and so does Datadog's revenue without needing to sell a single new contract. They beat revenue and raised full-year guidance above estimates. 63% of the S&P 500 has now reported. 84% beat estimates. Companies are beating by 5% on average versus the 3% historical norm. Earnings growth is tracking at 28% year over year. This is not a normal earnings season. It is one of the strongest on record, and that fundamental strength is what is keeping the market at all-time highs, despite oil and geopolitical pressure. 3 reports this week matter well beyond their own stock prices. Cisco tells you whether AI networking infrastructure demand is accelerating. Alibaba tells you the health of Chinese tech and AI adoption. And Applied Materials, which sells equipment to every major chip factory on Earth, is a leading indicator for whether semiconductor capital expenditure is still growing over the next 6 to 12 months. NVIDIA reports in 8 days, and everything we have seen this week is a preview of what is coming. AMD up 19% on AI demand, Micron up 33% on memory shortages, ARM up 22% on chip architecture licensing, SK Hynix at all-time highs. Every single company in NVIDIA's supply chain and partner ecosystem is signaling that NVIDIA's order book is enormous. 5 numbers to watch when NVIDIA reports on May 20th. Data center revenue and forward guidance. Blackwell chip demand signals. China H200 revenue. How much of that 2 million chip order is translating to actual shipments? Whether they use supply constraint language like AMD and Alphabet did. And margin expansion, which signals pricing power in the most competitive chip market in history. 3 scenarios depending on how this week plays out. Scenario A, soft CPI plus progress on Iran. Growth stocks surge and the bull market extends. Scenario B, mixed data and continued stalemate. Selective positioning in AI revenue generators, plus energy holds well. Scenario C, hot CPI plus Iran escalation. Defensives, energy, and raising cash is the right posture. Know which scenario you are in before you make any moves. This week, your concrete watch list for this week. CPI this morning at 8:30. Trump-Xi summit Wednesday and Thursday. Watch for semiconductor or rare earth signals. Applied materials Thursday. Powell's last day and Warsh's confirmation Friday. And circle May 20th. NVIDIA is the most important earnings call of this entire AI investment cycle. Watch oil every single day this week. It is your real-time geopolitical indicator. Below $90 means a deal is being priced as near certain, and you buy growth confidently. Above 110 means escalation is being priced in and you rotate defensive. Right now at 99 we are in the uncertainty zone. Balanced positioning is appropriate until the data forces a direction. Step back and look at where we actually are. The S&P 500 is at all-time highs above 7,400. The market has absorbed a war, record oil prices, a frozen Federal Reserve, an AI revenue scare, and now a hantavirus outbreak. And it is still making new highs. That is not a fragile market. That is a bull market with genuine, underlying fundamental strength driving it forward. Drop a comment below. Which story surprised you most this week? Was it the CPI number this morning, the Trump-Xi summit, the hantavirus Moderna trade, or the NVIDIA China demand story, where orders already triple the available inventory? I read every single comment and I want to know what you are thinking. I am Marcus. Subscribe and hit the notification bell. NVIDIA reports May 20th, and that is going to be the most important breakdown we have done in this entire series. I will see you there.